Good morning, everyone. This is Cinco de Mayo, May 5th, and we're running through some tickers. I do have a lot of requests. However, there are a lot of overlaps, which that tells me that we have an educated bunch of people in our group. They're not after the junky tickers. So let's go through it. I usually start by doing a quick skim of the indices. I'm just going to do the SPY. I'm going to say that last week I mentioned that we were battling the February levels, and we had the greenest, the most bullish set of circumstances since then. So that's an observation. As far as levels are concerned, I think the way we ended was pretty bullish, and now everybody is again looking at a new all-time highs. So here's why I will have another video tonight with a little bit more detail, but the big picture is that we're dealing with a couple of major candles and a target. The target is somewhere in the 520s. That's what everybody's chasing. Several things point to there. But in the way you have one candle on April 15th and one candle on April 4th or 5th. You can see them on my screen. It's this giant red one and this giant red one. So we haven't beat either of them. We are in the middle of first, and we haven't even reached the second one. So Monday, Tuesday, Wednesday, it's all about these two candles. If you just want a quick frame of reference. Now, the all-time high is actually 520 is the next technical target from everybody that's chasing the rally from last week. Having said that, I wouldn't start or short without real purpose. So the word that I'm pushing, have been pushing for about a year now, off and on, is tactical. At these levels, I would not be a starting investor. I would be tactically trying to ride the waves. So don't fight the trend unless you have a really good reason, and don't jump all in unless you have a really good reason. Having said that, let's just dive in with Apple. So Apple, technically 180 is where the battle zone was. And the fact that it jumped above 180 last week, I think is going to draw a lot of people getting stuck. Unless the markets go to all-time highs, I think Apple rally is in danger of running its course. I'm not shorting Apple. I don't advocate shorting Apple. It's an excellent company. The report was less than excellent. The reason why it jumped so much is because they beat expectations of nobody expected record buybacks and such. So financial engineering is what got it up there. The report was terrible in the standpoint of its sister companies, say NVIDIA and Microsoft, are growing, and it's shrinking, and we're celebrating that. So from that perspective, it was a terrible report. But because it's an excellent company, it can throw its financial might around and hide the fact that it's dying on the vine. It's falling behind. How about that? That would be a better statement. It's falling behind. So the fact that it jumped above 180, my goal with Apple to see what it does this week versus 180. Okay. If I just started going long Apple, I have to push back on myself. It's like, why didn't I buy it when it was a bargain under 170? And it was. Up at 180, 84, I wouldn't be chasing it personally. Technically speaking, if you look left, we're going into the February earnings reaction. That's what that giant box is. Every earnings reaction has been massive of late. This is the one from last February, and it's pretty big. So let's see what they do with it this week. Okay, it's one thing to have a relief rally, thank goodness. It's another thing to hold it and build on that. So let's see what happens. So that is Apple. Again, nothing against the company. It's an outstanding company. Albemarle, I haven't been asked about this, but this looks like a target for me than a starting point. The letter R, whenever I did this, that letter, I mean, we can move that forward. It still exists. This, the comment is very simple. Back here, it was a problem. They lost it. They couldn't recover several times over, and here they are coming into it one more time. So between here, anything around 136 is not a starting point. It's more like a target. So if I'm looking to invest, this might not be the best starting point. How about we buy the dip next into 126 or 124? I'm going to push back on a lot of these questions. So not to judge anybody, but I talk to hundreds of people every day, literally, and that's not an exaggeration because we're in the live room all day, every day, 9 hours a day. And it is incredible how still our group is better than the masses out there. But the knee-jerk reaction is to chase. Nobody asked me about Albemarle when it was around 110, when it was a bargain and into support. And now here we are, people are looking into it when it's going into resistance. We need to flip our instinct upside down. That's the only way we're going to have a successful career in investing over the long term. It's good that we have a group that we can stop each other from making mistakes. So I think even if you end up making money, if you get long here, it's not the right thing to do, historically speaking. AMD. I called the risk at AMD stock as it was rising just because they've been riding the coattails of NVIDIA. So last May, NVIDIA delivered a pretty mediocre report, but delivered an incredibly bullish message in which they said, we're going to basically double our sales in about 3 months, and they did. Well, AMD stock rallied with it since then, but they haven't delivered anything. In fact, if you look down here, they're starting to taper off. So I said 1 + 1 = 6, jokingly speaking, to say that something here doesn't compute. Stock is rallying like it's NVIDIA, but it isn't. There's nothing that points to the fact that AMD is going to benefit as much as NVIDIA with this AI, the popularity of AI. I'm not taking away from what Lisa Su, the CEO, has done at AMD. It is an outstanding company, but it had a lot of froth to give. It has given back a lot, and it's fallen into support. 132 zone is support, but if they lose it, they go to 124 and 120. Personally, if I'm looking to get a perfect price on AMD, which is not usually the goal, the closer to 124 to 125, the better for me. If you think that this is missing out on some incredible opportunity, I don't believe it will be, unless they have a headline coming like NVIDIA, and they could. I just don't know. So here's AMD for the super long term. We can see that the broad strokes, this area was a problem. This area has been fought over as a problem from back 2022. It took a long time to get back to it. It took a long time to build a handle. So this formation that you see is pretty bullish, and the target was that. The target is actually, let's measure it. It might be like 2 to the penny almost. Let's see here. 78 points, almost 79. Yeah, they exceeded the target. This was the target right here, and all of this was extra froth. So now what? Now they're falling back into the same circle. So this should be a support zone, but it's spread out. This whole thing is a support zone. So that's why I'm saying the closer to the 120 area, the better. From a technical perspective, fundamentally the company's fine. I'm just not rushing to buy it. Now, tactically speaking, I could get long by selling some puts or some put spreads. So I had this target for us scribbled in blue before, and we went right into it. I had this yellow path, and we almost filled all of it, and this was just merely copying and pasting. This yellow zone here might be an area that they want to revisit in the next few weeks if the market allows it. If the market rallies and AMD can get above 163, it could get to 180. So that is a tactical trade right there. If that's what you're trading, if you go above 160, if you went long, you can ride it. From a technical perspective, you're going to have sellers at 152, write them down, 159, and 170. 175 or higher, it's a mass of available sellers, so I think that would be a terminal spot there. Amazon, nothing wrong with the company. Okay, this is a massive earnings reaction. It deserves its own box. Wow, I mean, what the heck is going on with this world? That they have so much conviction and so much hate to a stock that is this stable in one day. That's just incredible. So I'm going to mark it, and I'm going to make it a little heavier because it's going to be pivotal for a bit. And I'm going to also put it as a global setting so I see it on any time frame. All right. So last week on Friday, we toyed with breaking a bit away from it. This is a breakout. There's nothing above here. So if this week Amazon goes above 190, tactically it's in open air. I wouldn't short it. Now, if you tell me you love the company, I tell you don't love it as much as I do, and I would not touch it up here. As an investor, if I'm not long yet Amazon, if I came into a fortune today and I was like, ooh, I've been looking to get long Amazon, this wouldn't be it. You may make money, but as an investor, if you're in it for the long term, where's the rush? I would wait for better entry price. Or better yet, I would sell puts to own the shares lower until I get assigned. And by then, the entry price would be much lower than that. That would be the cautious way to get into chasing without chasing. Boeing, I cannot believe, I'm still long and profitable. If I sold puts in Boeing, I did not get shaken out. If somebody rolled the sold puts in order to avoid allocation of stock, that's fine. But I cannot believe the mudslinging in social media. I mean, there's a full-out attack on this company, falsehood. I mean, you see them, like just yesterday, I was on YouTube or Instagram or something like that, and a little video of two cockpits side by side. One is Boeing and one is Airbus. And they show the Airbus one, nice, cool, calm, and collected, and the Boeing pilot is shaking and rattling and whatever. Clearly, this is mudslinging, and it's like a full-on assault. It's like, dude, they don't have a sales problem. They just have a delivery problem, if anything. So perception is reality, and that's what they're trying to push, a perception thing. The stock is good because of the fundamentals. The chart is under fire. They have a lot of buyers below 170. If you want to take two lines to watch, 178 on the upside right there, and 160 on the downside, that green box. That's where the battle is. The higher above that green box, the more solid support it will be. So I think this drop right there was pretty violent to place a bottom. I am long via sold puts, so I do have some room to play with, and I wouldn't panic out of my position, especially if I have time. Fundamentally, the company is fine. It's a duopoly, and the other entity cannot deliver all the planes for the world, and the world needs planes. Magically, all of its problems will go away, I think. All right, Alibaba, I haven't traded that in a long time. The company looks like it lost a step. So if I zoom back out to a daily chart, you can see how much trouble it's in. I used to follow it a lot, but not anymore. So if from here to 85 is an exit zone for me. If you look at it visually, you can see how it kind of had a floor somewhere in this area. You can see a tabletop with the exception of this one dip right there. And look at all these peaks. So what's it going to take these out? And if they do, what are they going to do with these? So buy the dip, I guess. The next time it falls to 75 or lower, 76 or lower, get long. And then see if they can come back up to 86. I wouldn't chase it. It could go to the moon. This company earns a lot of money, but I don't know what the political rhetoric is over there. And here, this is a better view. So you can see how it's a pivotal zone. Look at that poke right there. That should be death. I mean, when we get here, who's buying the stock right here, knowing that there's this candle? If they make money, they got super lucky. Or if it gets to here and they buy it against these candles. So you see how close you are from a potentially a target rather than a starting point. Bank of America, you know how much I don't like banks. They're robbing us silly, and they're getting the government to help them do that. The Ponzi scheme that's going on in the U.S. right now is pretty scary, but it is what it is. And I profited from sharing a JP Morgan trade with you. I closed my trade because I'm also short the XLF. I don't want to be short too many banks at the same time. Everything else worked. The XLF short is red, green. So now I'm in a red state because of the bullish position from last week. Bank of America is a good company. I think it has the largest depository in the U.S., maybe one or two. So their hands are tied. They can't get too creative legally. This here is not a starting point. If I'm looking at it, I'm checking these out. Okay, I'm checking this out. Like support, lost, couldn't recover, and here we are. So just from that perspective, this tells me that this here is not a starting point. So I'm going to put that sync globally so I can see it on all time frames. This is a daily. Let me go to a weekly and see what we can find out. All right, so you can argue that this circle right there is that area back here in January 2020, just before the pandemic hit, before the world changed forever, right there. So, pandemic collapse, the stupidity of the pandemic reaction. This was free money for everybody, and then they couldn't recover it, and here we are. This red W you see has a target of 32. So if you wanted to get long Boeing, Bank of America, 34 is an area of interest, 32 and 26. 34, 32, 26. Pick your entry spots. I would not start longs here. Even if you make money, I think it'd be a mistake. All right, Bill.com. Whoa. Wow, that's a violent reaction. Let's see how it went. Okay, so they went to 68, failed against 69. See, prior failures. They go back down. Let's see if they have a proxy. Yep, prior support. So you now trust the fact that charts do matter. There's nothing to do here from that perspective. If I have not looked at their fundamentals, but I'm looking at their sales lines and their increasing sales. So I'm not sure who they disappointed with that report, but clearly, if I loved it before the report, I should love it again. I don't love it. I don't know anything about it. I think it's a decent business idea, but why is it falling out of bed? So unfortunately, we don't have any history prior to the pandemic times. So I can tell you that if they lose 52, it becomes a giant question mark. And if I'm an investor, I don't get shaken out. And if I'm getting long, I would take no more than half. And then I wouldn't add until it fell to like 30, if so. I'm not saying it's going to 30. I'm just saying I don't know what happens if they lose support. That's a genuine question. BITO, let's see my markings. How did they do? Oh, check this out, folks. Charts win again. I drew the circle. I put a line, and that was the downside target that I had. If you lose the line, look at where they went and bounced right back. Okay, so from that perspective, what I'm going to do is move it left so not to confuse anyone. I'm not cheating. You saw it here live. Now it looks like fait accompli, mission accomplished. Now what? Now there's this R. You can bring it down to this area just above here. So last week I made the comments live that the crypto trade is at a very, very important spot right here, right now. BITO represents the price of Bitcoin, but doesn't track the spot. They do have, they quote trade to pay. So they do something with the futures of the Bitcoin price, and then they reward people by tracking that. And then they pay a gigantic dividend. But it's not an official dividend, so you just can't rely on it. We've benefited from it. I'm out. I'm no longer long. We got in the 11s. And so from here, after this bounce, this is not a starting point. Between here and 28, there should be a lot of selling. And if the selling persists, you are in danger. I'm not calling it, but right here, there's a big R. And if that R, they win out, you are in danger of doing this. Okay, now, if you did this and you lost that, that's two ifs now in this statement. The downside is a giant drop in crypto. And I mean it. Like the drop would be like down to, this guy would fall below 20 by a mile, like 18, 17, 16, it's all fair game. In theory, this whole thing is the downside scenario. Let's go with it just from here to here. So this one would be it, something like that. And that would put it back into a reasonable support zone. I'm not bearish crypto. I'm just showing you what the risks are, giant R. So how do I know that there's progress? If it goes above 28.20, so I will say progress to avoid 20 minus. So now I know. I don't even have to watch it. And then I'll put an alert down here. Uh-oh. That's it. Blink. Yeah, I wouldn't touch this. Look at that spending. The losses are growing at an alarming rate faster than the sales. I know they're trying to establish a business, but I think the givens of that business has changed drastically. I think now the world knows that it's not about EVs. I'm not saying there's no room for growth, because there's a lot of room to have EVs can be part of the solution, but it cannot be a replacement of the internal combustion engine. Now that is physically, everybody accepts it. It was clear to us from day one, but for some reason everybody was not seeing it. Now they are. So if they're growing sales and they figure out how to contain their money, actually, let me go in there and see. So you can't do business like this. You can't have your COGS be bigger than your sales. You cannot. You cannot sell burgers where the ingredients of the burger is higher than the price you're selling it at before even you get labor involved. That's just insane. So hopefully they don't run out of business. They don't run out of money, because they're literally burning cash to do that. So I don't know what to say about that. In fact, I'm going to make a note about it. I have a class coming up. If you're interested, reach out. Okay, how to slice and dice a company in 2 hours. Let's see here. Bitcoin. All right, so I have the wrong ticker here. BTCUSD. I know my form doesn't allow for that many characters, but anyway. So same as BITO, they made a recovery to a neckline. You can see it right here. There has been a battle zone. Let's look back to February. Again, just like the stock market. Whoops. Just like the stock market. Battle, support, battle, support, battle, lost, regain. And that's what they're doing again. So if you want to get to these two, do it like you need to. If not, and you lose this one first, you're going to trigger something lower. So that's the deal. That green arrow is still not out of the woods. They are trying to recover necklines. So if they don't get back to 67-ish and they lose 59.7, that area right there, that white line, they're going to finish that green arrow. So that puts them in the low 50s, high 40s. That's the forecast for Bitcoin. Oops. CL, I don't know if you meant Colgate or crude oil. I'm going to say crude oil, so we'll go with that. Colgate? Yeah, I'm not going to do that. Crude oil. I love it. That is the best thing that happened this month, last couple of weeks, is the fact that oil is much lower. This is target 1 and 2, I believe. Anyway, a couple of targets met from this giant red W. Target 3 is at 70. Whether we can get there before a pop, I don't think so. We should pop. We're falling into a lot of support. Now, this should help inflation reports. So this should be able to give Powell some cover to keep talking rate cuts, which is insane. But there we are, talking rate cuts again. I would expect a bounce towards 81 or 82, and hopefully it fails and they come back down here and they come down. So the USO trade worked out. I got out the next day with a 60% gain. Hopefully you guys wrote it down longer. But I am not... I don't think the world is growing, and I don't think we're consuming more and more fuel. And I think we have way more fuel than anybody wants to admit. We don't have an oil shortage. I don't know why the governments don't crash the price of oil, because they have the ability to. All governments have the ability to crash the price of oil and fix the lives of a bunch of people. Everything will get cheaper, because everything we produce in the world has to touch oil, diesel at several points. So lower that cost, everything, it just permeates quickly. Anyway, if I was president, that's what I would do, crash the price of oil. Not a good time to be short oil here. And if you're long, use rallies to get out. That's the trading. Clean Spark. Is this another EV company? Data centers operates. No, maybe not. Okay. You have a short-term base that they're bouncing off of. You're probably going to have resistance at 1950 inside this zone right there. So 18 to 1950, there should be resistance. You have support below. You're kind of stuck in the middle with earnings coming up, so be careful. I don't know it fundamentally, so I cannot help you. All right, coin. If you were in the live room, we did an iron butterfly on it for the earnings, and that was a big win. and not much happened with the earnings reaction, which is pretty good. So coin flip stock is stuck between 244, that spike right there, and that includes all of this, and between pretty solid support, that spike right here, and all of that. If you lose 200-ish, you're in danger of losing another $30 to $40. And conversely, if you take out that one candle, you get up here. So but this one is tied to the hip with Bitcoin. So you're going to have to go back and watch what I said 3 stocks ago, my comments about Bitcoin and BITO, because you're tied to the hip to that. If you don't believe me, just overlay the 2 stock charts. You will see. Except this one does not have a bottom, and crypto does. So this is a company versus an asset that is wanted by everybody. I personally wouldn't touch it at all because of that fact. It's tied to an asset. The stock price is tied to an asset, and the company cannot control any part of it. But if you want me to be long, I would have to wait until 150. What? $75 lower? You asked. I'm giving you my opinion. It's not valuation. It's a chart comment. DJT, I couldn't give you valuation because I don't know what business they're in. Technically, you have a high, you have a low, and you're right in the middle. You buy a call, you're guessing. You buy a put, you're guessing. So in the absence of me knowing what the hell they do, I couldn't tell you if it's a good company or not. The chart says you have buyers below and sellers above. So if you're not good with the charts and you're trading the stock, you're just using your luck. You're counting on your luck. Because at least with charts, you can say, okay, there's a gap here and a gap there, and they're targeting this. There's a breakout here. There's a harmonic there. But if you're just going on hope and just feelings, I think you're opening yourselves up for some surprise. You could make money, but it's not very, what are you using? I can tell you 60 is a lot of sellers, and I can tell you 36 has a lot of buyers. All right. Okay, so I wouldn't touch this stock. I don't trade anything that says 3x, especially new ones. So this one, direction, daily, regional bank, bull. If I wanted to trade regional bank stocks, I would use the KRE. My personal thing. You don't have to follow that. Let me see here if this is manipulated. Yeah, so let's see how the KRE looks over time. You see how it's nice and flat and growing? Why is this thing straight down? So maybe it's the timing of when it came to market. Anyway, so let's go with that. You do have this stock has a lot of sellers above. Anything above 80 is going to be a struggle. If you clear 82, you might get to 90, where you're going to struggle again. As far as support, you have support starting at 66 or lower. 62 is strong, 58 is strong. Now, if you lose 62, you could lose 58 as well. You can ask me about it tomorrow. I don't have the details yet. Enphase, I'm starting to not like this company. The quarterly reports, look at it. What the heck? Sales are falling off a cliff. So not sure if this is COVID relief money going away or something, but there's definitely something going on with the sales. So until you get an answer to that, don't be stubborn. Now, technically, I've traded this from the bullish side several times for us and won. The last one was a little struggle, so I walked away. If you twist my arm, I would sell puts to own shares, and that's about it. I would not buy calls or buy shares. I don't want to invest in the company until I figure out what the heck is going on. Now, I do have a reaction from the earnings, and that gives me a box to play around with and another box of support below it. So from that perspective, you do have support. It is also very sensitive to other companies reporting and headlines like CSIQ, SDEG, First Solar, even industrial companies, because it's considered an industrial and it's tied to the electric grid type of deal. So be careful with it. Up here, it wouldn't be for me. Down here, maybe. But you might know the industry better than me. My knowledge, I don't know what that was. It crashed my chart. That's what that was. Nice going. Okay, so what do we do here? We crashed the chart. This is live TV, folks. Let's load the layout again. Hopefully it comes up with a different chart. I believe that was it. Please don't be that stupid company. Okay, So we're going to skip that company, whatever that is. In fact, I'm going to delete it so it doesn't crash our chart again. No, that wasn't it. Okay, we deleted the wrong one. This one. First Solar. Oh, right next to end phase. Okay. Whoa, what happened to First Solar here? That looks like a cliff. Look, I had a trade at some point ready to go, and that's not First Solar. Did I make a... It's FSLY. Never mind. Okay. So FSLY FSLY fell apart on earnings reaction. I honestly did not review the earnings report. I think they were like single-digit growth. I'm not sure. I'll double check it. So I had an order ready to go, a write-up ready to go with no specifics. It's like, okay, I want to catch this falling knife, and I haven't done it. So they lost a pretty pivotal zone at 14. This target from 14 is lower than this. And if it does go lower than this, then it triggers that. And that target is much lower than this. So what? Is it going to zero? No. So if I liked FSLY FSLY up here, I should love it down here. So here's how I would deal with this. If I'm already long, I wouldn't add, unless I decided to take half of a position. And I'm not sure that that was a big drop. Depends where you're long from. If I'm looking to get long and I know the company, I would take a half a position at most and double down if it really crashes to try to get out with minimal damage. You should know that at this point, a negative reaction that's this violent on a stock that's already off of its highs is pretty scary. So you should really study why they fell fundamentally. I don't know exactly, but should be easy enough to find out. If it's an opinion, then you can go and do your thing with it. So don't dig your heels in as if it's going to bounce. Some stocks don't bounce, so make sure you know what you're doing. So there's a lot of futures requests here, and that's throwing out my machines. So GC is gold, and my machine doesn't recognize those unless I manually intervene. All right, so now gold gave you what you should and should not do. This is your box right there. I wouldn't get long here, I wouldn't get short here, but if you break out of the box, you're going to accelerate lower. My guess is that gold has seen the highs for a long time, and it's a guess. I don't have a reason to believe. I think we pop one more time, fail at 23.40, and then how about I say it differently? If we lose 22.80, I think we go to 22.10, if not 21.90. So we'll see how that plays out. Target, it could go to 23.50, it could go to 23.90. This is where the sellers have to come in and do their work. There are a lot of sellers between 23.40 and 23.60. If you are trading the futures, these comments are not enough. You have to jump into the live room so we can discuss them. I don't trade futures like that. I have to be tactical inside like 5 minutes and 1 minute charts. I don't leave futures trades unattended. Some people do. I think it's a mistake. If you've been trading for a long time, you know you've seen some pretty magical things going on in the futures overnight. So I would not leave myself to be wiped. All right, GDX is not gold. Okay, the GDX is a collection of gold miners. And so the reason why I don't like the GDX is because let's say gold rallies and the market falls, the GDX will fall. It might move with gold for a little bit, but then it follows the market. It's a basket of companies. I don't think it made an all-time high, did it, with gold anyway? So it has a catalyst at 37, but it's also a problem. Look left. So wherever you start your breakout, you're going to face immediate failures. You could get to 40 and 43, but I think this area of 36 is an end point to dip back to like 29. So I would rather buy the dip on this one. And we've been good right before. Like, look at this. This played out kind of like a pop and a drop. It played out. The levels have played out. See, this one played a role here and a supporting role there. So I'm not going to extend it. And this is where the whole battle has been, inside these this golden zone. So these three lines represent the heart of this extension. So the last rally, they've overcome it, and now they have the meat of it as support. So the bulls can hold a dip, but they also have to deal with the rips. So they're kind of stuck. You're going to need a catalyst. GM, oh boy. Okay. So maybe now I like car companies stocks better, that I know they're not committed to EVs. Nothing against EVs, it just mathematically wasn't penciling. Unfortunately, if I'm starting to go long GM here, I'm ignoring what happened the last time they were in this area. 50 to 54 was a huge ledge that they lost. Look left. So it does not make for an easy place to start longs, in my opinion. So this should be, the whole zone should be a complete resistance area. And it's an area, so it's a little wishy-washy. I wouldn't like buy a put for it, but I definitely wouldn't start longs. Now it looks like a breakout, and it could extend to 52. So if you're fast enough to make money in between those and you're a trader, you might make money. So here we go. Lines that have prevailed. So dips into 42 should hold. And breaking out of 46.5 should get you another $1 or $2 out of it. Okay, so how do I do it? If it dips, I get long and stop out if it doesn't work. Or then that gives you the opportunity to ride it all the way back up. If you get long here, you're hoping this continues, and if it dips a little bit, you get stopped out. So it's up to you. It is tradable. Goldman, look at that. Exactly the same chart, exactly the same comments. So between this one and JP, I probably would rather short JP, just JP Morgan, just because it is a bank. This one is more of a black box of financial shenanigans, and it looks like it's breaking out. So I would not want to touch it. If I'm long, I would enjoy it. If I'm starting longs here, maybe you make money, maybe you don't. It's not for me. So I don't know how to value this thing. I mean, I know banks are priced to book, but that's why I shorted JP Morgan. It's as expensive as it's been. But with this one, I don't know how to value it. So maybe you do. Technically, the chart says don't chase it up here. It's not an obvious moneymaker from this level. It's breaking out into open space. You can't short it. You have no proxies. Okay, be careful. All right, and with that, we end video number 1. Let me go stop that.